Have you ever tried to pick a market bottom and get into early or too late and then watch the prices blast off without you? I used to have that same problem, but I stopped missing moves when I stopped guessing and started waiting for confirmation. I call it the early warning process. I use simple charts in a repeatable sequence to help me when the odds are actually in my favor. It's how I clarify, simplify, and multiply my decisions instead of guessing. In this video, I'm going to show you how to use exact clues. You'll learn how to spot high probability major bottoms and high probability minor bottoms so that you enter with confidence and not just hope. Stay with me to the end, and I'll give you a bonus on how I use these same tools and clues and cues to build long-term wealth, not just make trades. So let's dive in. Let's focus on the major bottom that happened back in March, April of 2025. If you recall from video number 1 about the tools we use to spot market bottoms and tops, you'll notice that the first thing I wait for is a momentum shift or the momentum being down low or at a support level. Well, for this particular bottom, that's exactly what happened. We hit a market low, and then I look for a candlestick reversal signal. So 1 is the momentum, big M. And then 2, what am I looking for? What's our price action doing with regards to the moving averages? Now, this bottom in 2025 was a little bit wonky because, as you see, we get a huge breakout above the 8-day moving average. So if I would have taken that breakout, I would have suffered through a pretty significant pullback before it took off again. But this is what I call the classic two-step process. New lower low, comes up, pulls back, that's leg 2, step 2, and then takes off from there. And that's exactly what happened with this particular bottom. So what are the rest of the clues? The moving averages, the MAs, and then after that, what am I looking for? I'm looking for what is the trend, support, resistance doing. So that's number 3, trend, support, resistance. I've drawn in on this particular bottom basically a zone that could be a zone of support that's based off of where this reversed off of. So if a person would have taken the first buy on the cross of the 8-day moving average, the pullback from here down to here would have been about 17%. You would have been stopped out. Okay, in this specific bottom, what I have over here is I have my setup in that area right there. Notice, yes, we did close above the 8-day moving average there, which could be a trigger to the setup. However, I've got some things going against me. I've got all these other moving average pointing down. So my moving averages haven't actually shifted yet. But what are the triggers I can look for with this major bottom? Well, a couple of them I can look at are, 1, this two-step where I go up, I come back. I've highlighted this level as a zone of support. Price action's got right down into it. So a secondary trigger, while I haven't breached the 8-day moving average yet, would be to take a trade above the high of the low day, which would have been gotten me into this trade about there. That's one trigger. Now, you may be wondering, is there other triggers that we could be looking at? There sure is. We could wait until the price action is above the 8-day moving average, and here we closed above the 8 and the 20. And then at that time, I'm waiting for this pullback into the 8 and the 20. I get that right there, and it just so happens to coincide with when the 8-day crossed the 20, and then we could ride that. But I think it's important to know, once we got the second trigger, what was the run? That I find always very interesting. And when I'm trading TQQ, I'm actually looking for just to grab a portion of that. And so in 13 trade days, TQQ ran all the way to the top, 37.64%. Now, when you stack those up multiple times through the year, you can see how that can compound very nicely. So that covers one type of reversal from the bottom. And again, remember one thing. reverses off the bottom. I'm not trying to pick the bottom. I'm trying to let the bottom form, and then we trade it from there. I let the pattern put in a lower low and then do its bounce. What makes it a major bottom, you may ask, is basically my TSI in the lower reversal zone. That's down below minus 42. Do you see that right there? Yeah, that's a major bottom. Now let's move on to the minor bottoms. And as we do that, let's remember that bottoms tend to be closer to a single event, while tops tend to be a process. And we'll be covering that in the next video, the third in this series, about defining market tops. So a question for you before we move on. What's the worst stock or ETF you've ever tried to catch a falling knife on? Drop the ticker that you were trading down in the comments. I guarantee you are not alone. Okay, let's go ahead and jump in and look at a couple of the minor bottoms. I'm still looking for the same type of thing. I'm looking for what's my TSI doing? What's my structure doing with regarding the moving averages? Where's my support? Where's my resistance? And one of the other things I look for is, am I getting some nice flags to be able to determine a pattern on? Let's jump into this one right here. And what we see on this particular entity is that a couple of things. One, price action is surged up. If we were trading the first one, we would have taken off a nice profit. Now we're waiting for the next setup. Once the price action starts to trend up like this, and we're above all the moving averages, our next opportunity is what I call these minor bottoms. We have one here. And so TSI, yep, starting to reverse. Am I at a level of support? This is number 3, remember? Yes, I am. What else do I have going on this one? I've got this really nice little flag going there. And I have a close above the 8-day moving average. Now, that's one of the triggers where on this particular trade, at the end of the day, I could go in and say, I'm buying that close above the 8 because I have a total green light to be making this trade. So again, let's just refresh real quick. TSI, yes. Support, yes. Trend line, major trend line, up. Flag, minor trend line, down. Close above the 8. Time to jump on board. Now, why didn't you want to jump in back here? Well, you could have, but the thing that's bothersome about that is look down here. TSI is still heading down. So I didn't have all my clues in one place, right? So that jump from there. What was the run up to the move? That would be up here. Well, check that out. It's 24% in 28 trading days or 38 days on the calendar. So nice little move. Now, I'm not going to say you're going to get up totally at the top here because we're not talking about tops yet. Remember, that's in the next video. So that's one. Second one we want to take a look at is, what about this trade right here where it falls out of the sky, but then it reverses, closes back above the 20 and the 8. Again, taking a trigger, what's my TSI doing? At this point here, my TSI, I'll grab exactly where it crossed. That puts it up about right there. So I've got 3 days where I can make a decision, either to buy the breakout of the 8 or buy off the 20. Again, support, 8-day, TSI cross. Am I at a level of support here? One of the positive things is when it fell down there, it stayed at a level of strong support that where it had bounced from before. So everything is in my favor. So if in this particular case, let's say I picked up the trade on a close above the 8, in just a few days, it ran about 8.4%. Not huge, but that, again, it would have triggered me in. And the way you set up your trades, and that's one of the things we do with AutoPilot Trading Service. If you're interested in checking that, I put a link down in the description for checking out the AutoPilot Trading Service if you want to trade along with other AutoPilot traders. As you see, yeah, 8.42%. We have automatic orders that pop in that basically slide up a trailing stop. So this trade would have never lost money, even that it hit here and then dropped down to here, because the trailing stop would have stopped this out. So what about a third one? Well, very interesting. The third one was a couple of different things. When I get this signal right there, highlight that. What is that? I have a Flag line, am I at support? Yes, I am. What's my TSI doing? Not crossing yet, but I could wait a couple of days and there we go, breaking above the 8-day moving average. Now, I'm gonna have to be aware that my stop loss have to be in place because it moved back down. As we see here, and again, that's why it's important to pay attention to the charts on a daily basis, and that's why I like to review the charts during the final hour or after hours, because that way the candlesticks and the whole chart tells the whole story of what went on during that day. As you see, we get our crossover here. So in reality, that would have been a buy off the 8-day moving average. Well, what would happen with that trade? Because I'm going to show you the positive with the negative here. Let's say I got in there at the 20-day moving average, about there. Well, this pullback here was about 5.9%. Well, depending on how large my initial stop loss was, I may be still in that trade. If I did get stopped out, look what happens. Look at that. A double bottom here and here on my momentum. Price action takes off again, bouncing off what? The 50-day moving average. That's a positive move. How far did it run? And we have to also go back and remember that my ultimate trend is still that way, correct? Is up. And we're just getting these little pullbacks, pullback, pullback. So I get this double pullback here, and then prices take off again. I go through the same process every time. What's my TSI doing? The TSI crossed there. So I've got a total green light on that one. And as I spoke on the first video that we covered on this, all these pullbacks, my green light kind of turns to yellow. So I'm cautious, but I'm looking for the reversal. And that's exactly what we get here. Big pop, nice reversal, gap up here. And then from that point there, how far does it run? Well, it runs 17% and 14 trading days. So we've shown 4 different potentials for getting into a position. And each one of those, the way I calculate it is I look at if I can pick up half of the potential move, then let that compound. That also helps me take risk off the table and move higher. So all of this builds directly on the early warning process that I outlined in video number 1. The links are, as I said, were down in the description. If you're finding these videos helpful, utilizing the market tools for market bottoms and next video, market tops, make sure you subscribe to the channel. That way you don't miss the next part of this series. As we've seen the bottoming process on these daily charts, wouldn't you like to have an opportunity to let your winners run longer than that? And to give you an idea of how this bottoming works, we switch now over to the weekly charts. So we transition over to the weekly charts. I want to remember that long-term wealth is not built by trading every day. And sometimes opportunities don't show up on the daily chart as much as they show up on the weekly chart. So let's dig into this. Here's the exact major bottom we had on TQQQ that you saw on the daily charts. But remember how confusing it was? Well, a couple of things on this particular chart, which are very interesting, is this: your weekly chart would have actually gotten you into a trade earlier. And again, I am not promising anything, and what I provide is for educational purposes, but let's set a couple of rules up right away. 1, I'm still looking for the same thing. TSI getting ready to cross over. Am I at support? Yes. Okay. Rather than using the 8 and the 20-day moving average for my close above, I can utilize the 50-day moving average. Now, on my weekly chart, this is the 10-week moving average, which is approximately equal to the 50-day moving average. Well, let's just dissect this a little bit and then see what kind of a run this went on. So before I get into dissection, remember right here, okay, that is called a bullish cross to the upside, where the 50-day goes back above the 200-day. And in this case, the 200-day on a weekly chart is approximately equal to the 40-week moving average. So what did take place on this particular chart? Let me know if you see these. Leave a comment. First of all, if you'll remember the daily charts, and I'll flip back to it really quickly. Remember the daily charts and how confusing this was in this area here? A lot of zigs and zags and all that kind of stuff. Well, isn't it great that the weekly chart settles that down? Now, prior to the crossover, I actually get a bullish reversal signal. This is a piercing line, which is cousin to the bullish engulfing, same meaning, same weight. And then over the next couple of weeks, I get that pull back down into the support zone, which happens to be, and so that drop down there, it also coincides with what? My TSI cross into the upside. So entry number one, the following week, I get a close above the 50. Trigger number one. So set up, trigger, trigger one, and trigger two. And then how long do I stay in the trade? A couple of different ways to do that. First is as long as my 50-day is above my 200-day, I'm looking for a significant pullback, a bearish reversal signal, a close back below the 50. I don't like that one particularly, but as a last chance exit, that does give you an opportunity. I would rather take my profits when I get these bearish engulfing type patterns. That's telling me that, hey, things are kind of weak. So what was my run on this? So, and again, we have the same thing. One, the momentum, the big move. Two, the moving averages. And number three, trend, support, resistance. It still works the same way. So are you ready for me to show you how and what this potential move, what it equaled to from the trigger point up to the ultimate upside? And this again was all done in 2025. And so what it was basically trigger here. That move was 193% to the high. If you captured half that move, what would that have done to your account last year? Leave a comment, man. So that's one. What about this? If I would have got in right at the 50-day moving average right there, well, that turned out to be 109%. Still excellent, given that that move took 184 days. Now, my question for you is, do you have the patience to wait 184 days? A lot of people don't. They'd be fidgety. Their fingers would be on the mouse pad going, I got to get out of this thing. How far is it going to go? Well, let me give you a couple of clues about how and when to exit. Remember we talked about the trend? Well, the trend is still up here, but I can go in here. I can connect these bottoms from about here. I do not go down in this area and try to connect the trend from these levels here, because as you can see, it basically would be a real wonky. Where do I find my first bottom? I mean, you could, but this makes a more conservative approach to that. So I just connect my bottoms here. And I could have done one of two things. I could have exited when I closed below that trend line, which also closing below the 50-day moving average. If I would have taken that approach, what would my first trigger have yielded? Well, that would have yielded about 132%. Certainly not as much as the initial run from that place right there. It would have been about 66% during the same time frame. However, it's a thing you have to determine for yourself. Would a 66% return opportunity, with that being your role to exit the trade, have been sufficient for you? The other thing somebody can do is put on a trailing stop after you're up nicely, and maybe you've taken some profits along the way. Then one of the things I do is I take a trailing stop. If we drop 15% to 20%, I get out. So what was this drop here? Well, that was about 7%. I would have stayed in. What was that drop right there? That was about 9%. I would have still been in the trade. What about that drop right there? 12%. The next week it drops down to 17%. So it would have put me out right there. So I wanted to share that with you. Those are a couple of ways, and it applies all three of the tools, clues, and cues that we covered earlier. So are you trading for short-term excitement or long-term wealth? Again, that's a question to answer. Spend some time thinking about. And which of those actually drives the majority of your decisions? My deal that I've learned is you don't need to catch the bottom. You need to participate on the reversal that happens after the bottom. Okay, if you want the full story about these setups and decision process I use week in and week out, check out my book, Trade Your Way to Freedom. I'll put the link down in the description.